This is the Jay Pitt Show.
Start with listener question here. This person says, I want to start buying rental properties, and I would like to do so in Louisville. Can you find good deals in Louisville? What are some pros and cons of owning rentals in Louisville?
I mean, I'm gonna hit you with an old school quote, right? The best time there was to buy real estate was 20 years ago, right? The second best is today. That saying is really the best time to plant a tree was 20 years ago. And the second best is today, but it's interchangeable in my opinion. I'm not a market timing kind of person. I'm a dollar cost average kind of person. The market goes up. The market rarely goes down, but it does go down, but it's very rare. Market goes up, market goes down. And you could apply this to the stock market as well, or Bitcoin or whatever. You should, if you believe in something enough, you should always be a buyer. You should always be a consumer of that thing. And if you do the right things, if you invest in the right things, they go up in value over time. The margins available in real estate today may not be the same as they were in 2010 or 2009, but I still think you struggle to find a better tangible, fungible store of wealth in the long term that is tax advantaged, right, for ownership, that is going to appreciate in value historically. I think you have a hard time with that, right? I mean, you and I went round and round about Bitcoin. It shares so much with real estate, but I just still feel real estate's a better investment. So I continue to invest in real estate regardless of the fact that prices have gone up substantially. Right? I mean, if I stopped buying real estate because I couldn't buy it at the rate I bought it at once, that just seems silly to me. That's limiting belief. That's telling yourself a story that is going to keep you from prospering while others continue to prosper. I mean, you're going to look back in 20 years. Ryan, if you didn't buy any real estate, right? And you're how old today?
I'm 29.
So you're 29 and you look back when you're 50, right? Roughly 20 years from today, and you don't have any real estate investment to show for it. You're going to wish that you had bought real estate at today's prices. I promise you that. Just because it doesn't happen in 2 or 3 years doesn't mean it's not worth it, right? Especially if it's income producing real estate where other people pay you for the use of your asset. I just think you should do it. So to dispel the myth, is it hard? That's relative. Is it hard to find deals? Well, if you're talking about buying stuff at 60 cents on the dollar, yeah, that's hard. That's not really out there. We're still in a low supply, high demand inventory market. You know, the things we've talked about on this podcast are very true. There are homes that are available, that are priced well, right? That are marketed well, and they sell instantly. And then there are homes that sit on the market because they're not those things. They're not available. They're not priced well. They're not prepared for the market. Those are opportunities. Now, are they opportunities at 80 cents on the dollar? Probably not. They're probably more like 90 or 92 or 94 cents on the dollar, right? So you can buy them at 6% below market value, and then you can get 4 to 6% appreciation per year for the next 5 years, depending on where the market goes, while you retire debt on that asset. If you put 20% down, you get good financing rates, even if they're a little higher than what they were a few years ago. And then you retire the principal balance at another 2 to 3% per year. So like you're making margin here, right? You're making profit by owning real estate. I think you should continue to do that. Yes, you can. What are some nuances based on Louisville? There is a local government that is increasingly less friendly to landlords. That's tough. COVID gave us some real challenges. There was a lot of money out there to cover people's rent that were under hardship, that if you were an active landlord, a smart landlord, you could help your tenants, apply for and receive some of those funds. Admittedly, I think quite a number of people took advantage of those programs, but that's the climate. There's a lot of people that disagree with registering rental property. There's a lot of people that struggle with the permits and approvals process on getting work done. If you're doing Section 8, there's a lot of people that feel like how the oversight of that, kind of program is handled is a bit oppressive, if you will, to landlords. So, those can be some negatives potentially, but demand is good. demand. I mean, we don't have rentals sitting vacant, and that's really what you want. You know, you want to give somebody a good property to take care of, and you want them to stay and pay. Stay as long as you want, as long as you pay. And turnover is your biggest expense when owning rental property. So yeah, I think Louisville's a good place to own rental property. I don't have any issue. I own quite a bit of rental property in Louisville, and I'll continue to buy here.
Yeah, I think it's definitely harder to find that needle in a haystack right now rental deal, which historically probably has always been true, but maybe more so now.
Yeah. I mean, look, okay, so it's recent enough that everybody remembers the bank foreclosure, subprime mortgage crisis, and how inexpensive real estate was during that time, and how easy it was. Yeah, when property appreciates at 10, 12, 14% a year, it's easy to create margin, right? You buy something at 90 cents on the dollar, okay, because it's beat up. You add a few $1,000s worth of investment that pushes the margin even more, and the market's inclining all at the same time. Yeah, you can make margin, but like that's not how things are traditionally.
Would you say finding a rental property to buy for appreciation is a little more feasible right now than outstanding cash flow?
I think you have to be willing to do both. I think you have to be able to invest money to create value, and that is where you're going to find any cash flow that exists. It's really hard to find cash flow with stagnant rent. So no upward pressure on rents really right now. It's kind of like staying where it was. I haven't seen rents go down. This is not Austin, Texas, right? So rent prices are not going down, they're holding. Prices of real estate are still climbing on sales, so and interest rates are still high, relatively speaking, compared to a few years ago. So yeah, when we used to be able to do the 1% rule where you could almost assure yourself $200 to $300 a month in positive cash flow on a sub $100,000 rental property, that's not there anymore. You're lucky if you're breaking even.
Yeah.
So what that does is that limits the ability to invest to wealthier people that can sustain not having positive cash flow, people that can actually withstand with other earned income or assets on side to pay the negative cash flow that exists. I guess what I'm saying, Ryan, is at the end of the day, it's still an asset with finite supply that generates revenue that is tax advantaged. And when you see those four things about an asset, I'd be hard pressed to name another asset that has all four. Mm-hmm. So I think, once again, back to the beginning of the segment, the best time to buy real estate was 20 years ago, and the second best time is today.
Yeah.
So I think that's what people should be doing.